Hi, this is Tushar Manudhane from Motilal Oswal Securities. We would like to discuss one of the niche play in midcap pharma, Shilpa Medicare. We are initiating with a buy rating and target price of 805. We believe that Shilpa Medicare is on the cusp of strong growth in earnings, led by product approvals in US market. From just an API player, it has forward integrated and transformed itself into formulator with revenue contribution rising from 0 till 9-month FY17 to 24% from formulation segment by FY19. Most of the formulation revenue is expected from US market, for which it has product pipeline ready and filed with US FDA. These products are majorly in oncology space and currently has good portfolio of 25 ANDAs filed, out of which only 2 are recently approved and remaining are pending for approval. One of the 2 products approved are azacitidine, that is generic Vidaza, which has a market size of $240 million, and only 2 other generic companies having final approval. We expect 15% market share with 15% price discount. The price discount is expected to be lower due to limited competition. The other product is capecitabine, that is generic Zeloda, which has a market size of $350 million and has 15 generic companies having final approval and about 9 companies supplying the same. We expect 8% market share with 55% price discount for this product, and Shilpa Medicare to garner $11 million from this opportunity in first year since approval. The key products for which we are expecting approvals over next 2 years are imatinib mesylate, that is generic Gleevec, and zoledronic acid. Generic Gleevec is settled launch in last quarter of FY19, subject to final approval. Channel checks suggest that there are 18 to 20 companies in generic race, so market share may not be much for Shilpa Medicare. However, it could be a better EBITDA margin due to its presence across the manufacturing value chain. The 2 products which have potential to drive US revenue by 45% in FY20 are generic Velcade and generic Gilenya. Both the products are subject to litigation. Current status for generic Velcade is that district court has given decision in favor of generics for invalidating patent expiring in 2026, and litigation is ongoing in federal circuit. For generic Gilenya, PTAB has quashed patent expiring in 2026 in patent fight with Torrent Pharma. We have assigned 50% probability for both the events and have not yet factored revenue upside from these molecules in earnings model. On overall basis, we expect US revenue to grow from nil till 9 months FY17 to rupees 3.3 billion in FY19. The other segment forming base business, that is CRAMS, oncology API and non-oncology, are expected to grow at moderate rate over next 2 to 3 years due to considerable market share in those products and limited industry growth. In addition, Shilpa Medicare has invested in companies developing products using nanotechnology, new drug delivery system, novel ophthalmic formulation, niche generics and biopharmaceuticals. The current investment is small and has not impacted financial leverage. However, benefit could be huge over next 4 to 5 years. On overall basis, we expect CAGR of 29% and 41% in sales and PAT to INR 16.8 billion and INR 3 billion respectively. This is excluding any effect of transfer of CRAMS business to JV. Our sensitivity analysis indicates limited downside of 9.9% from current levels in bear case and upside of 65% in bull case. We have valued Shilpa Medicare at 25 times 12 months forward earning, which is premium to peers trading at 20 to 21 times FY19 earnings, on the back of potential of strong earnings growth possible from US market in FY20 led by product approvals, which would have a better EBITDA margin, thereby having good overall EBITDA margin. We also give higher multiple for forward integration to formulation and for regulatory clearance in place. Accordingly, we arrive at a price target of 805. In case of any queries, please feel free to get in touch with me. Thank you for patient listening.